Hello everyone, welcome to the Ichimoku daily analysis for gold for Tuesday, June the 30th. Well, just looking at this candle, we can see that there's been a huge change in sentiment in the market. If we look at the previous first time frame upswing, we know that we had a series of higher highs and higher lows, and now we have a very, very large red body candle. That tells us that the bears have sold off this market quite heavily. The bears are in the ascendancy. They made a very, very large net bearish gain for the day's trading. If we look at the previous candle, it was a doji candle, and we actually had a change of trend yesterday where we had a lower high and a lower low on a doji candle, which meant indecision. We were highlighted to a possible change of trend with this doji here, which tried to trade up above this short-term resistance level, and the market sold off and sold off again. Tried to trade up to this level again, and we can see from the shadow that the market just traded above the level of this resistance and sold off very heavily. So we still have now a first time frame downtrend. The previous trend is still in force, even though the market today made a higher high and a lower low. Now in bar chart terms, that's an outside day. Outside days denote indecision in the market, but this candle was very, very bearish. So I think that negates any of the potential bullishness that might come into this market. Now if we look at our second time frame trend, we have a series of lower peaks and lower troughs. We still have, even though we had a higher peak, we still don't have a higher trough to change the trend to the upside. So our previous trend is still in force, which means that we still have a second time frame downtrend. And now what we're seeing is a continuation of the major swings of this second time frame downtrend to the downside. And if we look at the character of this trend, as the market's been trending up and down in the first time frame of the second time frame trend, we can see that all of the rallies have been on very small bodied candles, and then they end with these doji type candles, and we can see here small body compared to the previous bodies in the down swings. Small body dojis. And then on the down swings we have very large red body candles. Again, another large red body candle. Now what would we expect if we look at the character of these downswings? They've lasted for about 2 or 3 days. They've been very, very bearish, but they've lasted for only about 2 or 3 days, and then the market retraces on very weak candles and then sells off again. So I'd expect that will possibly happen again. We have a very, very large candle and a red body, so I'd expect that the first time frame downtrend will continue on its way. And we should look to the bottom of the cloud here, or the Kumo, to act as support, and then we'll probably get a rally. It could, if it does poke through that level there, then we might see the swing low here hold as support. But what we will probably see following that is some sort of bullishness coming into the market. Now, if the market does trade down through the bottom of the cloud over the next day or two, and if we have a very, very strong close down below, if we don't see any of that bullishness coming into the market, we'd expect that the market will trade down to these swing lows here, which is at about 880. So it could trade down to around this level. Now, just looking at our Ichimoku indicators, if we look at the cloud twisted some time ago, so it's positive. We were trading up above the cloud, which meant that there was a positive bias to the market, but we've closed only just at the cloud here, so quite a change of character for the market if we trade down into the cloud. So the market is really quite neutral at the moment. It's not bearish because we're not trading below the cloud. We're not trading substantially above the cloud, so it's quite neutral. Looking at our other Ichimoku indicators, our Kijun-sen and our Tenkan-sen, they're both pointing sideways, which means that the market has no momentum. And if we look at this area through here, this market really has no momentum. The trending action through here in the short time frame is not the same as what it was through here. So the trending action is really sideways. So we can see that it's quite a large congestion area with all of these shadows as the market tried to trade up through the top of the congestion. So it was price rejection to the downside, but also as the market tried to trade down here, there was buying coming in. We can see from the shadows here, there was buying coming in when the market tried to trade down at the Kumo. And this is good evidence for what we know about Ichimoku charts with the Kumo acting as an area of support or resistance. And we can see here the market traded down to the Kumo, had some buying coming in, and then the market started to rally. Here again, traded down into the Kumo, buying coming in, the market started to rally, and the rally ensued. Look at this one here, we've traded down into it, and we've rallied a little bit. So we'll see how the market trades over the next few days. We could rally from here, but as I mentioned previously, if we look at the character of how the market's traded over the previous major downswings in this second time frame downtrend, it's likely that we will have another bearish day and then perhaps rally.